Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing the Golden Rules of Trading Part 3, Trading Like a Business. The majority of new participants approach Forex trading with no idea in mind but to trade and win. They did not make a plan and their objectives aren't as clear. They enter the market with one dream, usually getting rich starting with a small amount of $1,000 or less in a trading account. Usually they did not have a plan and don't have the necessary skills. They are unable to identify their strengths and weaknesses and think that trading is just predicting the market. The outcome of this mindset is failure and frustration. To succeed, trading must be considered a business. In this video, we are going to be talking about the importance of treating trading like a business. Firstly, we have initial assessment. You need to create an initial assessment document. On it, you will need to define the following: your current beliefs about yourself and the market, your vision about you, your life and your goals, make a list of your strengths and the list of resources you will need, determine your weaknesses and how you will overcome them. Next, we must establish our objectives. Set your monthly profit goals, then divide it by 20 to determine your daily profit goal. Finally, establish how many market signals you take on average using your trading plan and decide on the average profit per trade. Define your tolerance for drawdowns. Will you allow 10%, 26%, 40%, or higher max drawdown? Max drawdown is a critical value you should know for you to set your dollar risk per trade. We have dealt with this already, but let's remember the key factor. Max drawdown together with the percentage loss for your system will help you to set a likely max losing streak. For example, a well-known trend following system with only 35% winners will sometimes show up as 20 losers in a row. If a trader using this system establishes its max drawdown to 30%, the dollar risk per trade must be set to 30% divided by 20, which is 1.5% risk. Determine how much you will pay yourself and what percentage of your profits will be reinvested to grow your trading account. Next, we have operating rules and contingency plans. Establish the maximum amount of consecutive trades you're going to take. Set the maximum daily dollar losses you will accept before stopping to trade for the day. Set the maximum dollar gains you are going to take before halting your day-to-day operations. That way you keep trading rationally, avoiding losses due to your emotions taking control. Define also your weekly and monthly lot sizes. In the case that these amounts are reached, you should switch to paper trades until the next week or month. Establish a trading record with the relevant information needed to measure and analyze your performance and the system's improvement or adaptation to the current market conditions. Define the reviewing period for the performance analysis of your systems. Use statistical methods to analyze them. Next, we have markets, timeframes, and diversification. Define the best timeframe for your needs and time availability. Please be aware that shorter timeframes are more costly because of the costs of trading commissions, spreads, and slippage. These do not change, but the trading ranges shrink, and so do your profits. Define your basket of pairs to trade. Criteria for the list should include liquidity, volatility, and trendiness. Avoid very liquid markets for excessive volatility. You should ensure diversification to lower your overall risk. For instance, trading only major pairs will be sensitive to the dollar movements, thus a sharp dollar move against you will affect your overall trades all at the same time. In this case, make sure you have 50% of your positions long the dollar and 50% short the dollar. Know the big picture of all the pairs on your basket. We should remember that fundamental analysis is the driver for the underlying trend, and that surprising figures will trigger price shocks. Lastly, we have a basket of systems. Make sure your systems have an edge and that the average reward-risk ratio is greater than 1. Use at least 2 different and facing systems. One of them might be a trend-following system, while the second system fades the trend. This will help when there are no trends and when the pair is ranging. Sometimes one will lose, but the other will be a win. If both systems are profitable, the long-term result will be the sum of the performance. The downside to this is limited, as one of them will always tame the other system's losses. Use the position sizing as explained above, ensuring that your maximum risk per trade is limited to fit your preference for drawdown. Continue to develop your ideas and strategies. Backtesting these and doing paper trading is always worthwhile. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.